Hello everybody, welcome back to Financial Trading Basics Part 12, Squeeze My GameStops. I'm sure if you're alive and not under a rock, you've seen something about GameStop's price movements in the past couple days, couple weeks. It's January 28th. And so just look up the chart. I'm not going to just look it up. But it gives a great example of a bunch of different things I've been talking about in this series. So the first thing is this is an actual short squeeze. What is a short squeeze? Well, in the short interest is literally there's enough player there. You have a stock with a low float and it's shorted down, and the short interest, how many shares are shorted? And remember, shorting is not fundamentally, it's not like it's kind of like a loan, a bet loan type of deal. It's not like if you start a company, you sell a share. If you short a company, you're borrowing a share and selling the share. So you just have some short interest. It doesn't matter. It's not one player, well, more than one players, but 2, 3, 5 doesn't matter. The price increases to the point where now mechanically, I've heard people say that the short interest on GameStop was more than the shares available. If that's true, that's new to me. I didn't know you could do that. You shouldn't be able to do that. Economically, trading, like market mechanic wise, that is guaranteed to end badly 100% of the time. And I don't care about people losing money. That it just doesn't. It's not good economic structure. But your short interest is tremendously high, the price raises to a certain amount, and then what actually goes from just a genuine, what's the difference between a price increase and a short squeeze? Well, it's genuinely, the short interest is so high, people are trying to cover and they literally can't. So there's nothing about the fundamental business that has changed. It's literally traders and sentiment. Well, we'll get to sentiment, but what defines a short squeeze is literally people trying to cover and not, and that is their motivation for entering the trade, or more realistically, not being able to cover the trade they've already had. Regulation from the SEC and from trading brokerages. I want to talk about regulation from regulatory bodies more as a sentiment consideration. But for like trading brokerages, should TD Ameritrade ever say, and again, this is from an economic principle standpoint, not a practical, because I don't give one fuck if people lose money. But should like TD Ameritrade like restricted certain buys and sells for during the price movement? It's still going on now. I don't know if it's still going on now. I think Robin had also restricted some trades. You should not do that. That should again, I'm not. It's not like a moral principle point to call it illegal, but it's not. It's genuine faulty economic principles. Use of the words manipulation and capitulation in short squeeze. Like I said, this is an actual short squeeze, and a lot of times you'll see people just on stock forums saying, "Squeeze the shorts." A genuine price increase. The market's so big. There's so many players that a genuine price increase is often called a short squeeze, and it isn't. Manipulation is a bunch of people buying a stock ever manipulation? I don't think so. I think for sentiment versus fundamentals, clearly nothing in GameStop's fundamentals has changed that much. I don't know their balance sheet. As a consumer, I would short GameStop. Certainly as an institutional guy, we know from shorting it from $40 to $20, I wouldn't do that. Again, as a trader, I would just look for a more appreciative, a long position or call option is going to give you a much better profit potential. But like during the squeeze, if I had real cash flow, I would be naked shorting it at the gap from the 100 to the 200 to the 300 to the 500 for the longer term. Now, I would not recommend anybody, well, unless you know what you're doing, ever shorting during a short squeeze. That's quintessentially the exact opposite of what you want to do. But the fundamentals don't change. But I don't, for this example, I don't think manipulation is used properly anywhere. Like, I don't think the retail investors buying it, that's even could be considered to any way manipulation. What I do think it is confirmation bias and jealousy. Once, and I also saw this, just brief reference to Bitcoin and regulation. I just saw a former manager of Goldman Sachs come out and say Bitcoin's recent price movement would make him sweat or make him sweaty. You see the psychology of a regulator saying you need to regulate a price increase. No, you don't. This market mechanism has always been rapid price increases. That's how things get adopted quickly. That's how anything has ever moved ever. And that is the quintessentially the thing you shouldn't manipulate. And I have up here mechanisms of market makers. Market makers are just supposed to execute the trades and keep it from, just make sure that the flow of the trades actually execute well. So a lot of times you'll see people say manipulation for market makers, you'll say manipulation for the retail buyers, you'll say manipulation from the hedge funds. I just don't think that's an appropriate word for any of them. But for manipulation for the market makers, again, genuinely on stock forums, you'll see, the market makers are manipulating, and the volume will be like 5% of the float, and it moved like 10%, and it's just idiot Johnny screaming nothingness into the wind. But for the confirmation bias and jealousy from the regulation standpoint, you see, right, if you're in a trade, it goes up, you sell it, it comes down, you're going to feel good. I really truly don't care about the financial reward, like my trading income's not going to affect my career income in any way, but I still feel the sentiment, and everyone's going to feel the sentiment. But if you go from, you're in a trade, you're making money, you sell, it goes down, and now you're rooting against other people, this is where the concept of manipulation or regulation, people thinking regulation should step in. I mean, it's literally like bitterness and jealousy manifested as a professional way with convenient excuses of, well, Johnny shouldn't make more money than me. If I have to pay taxes, he also has to pay taxes. It's an emotional race to the most pathetic. It's the emotional race to the bottom. I think you got ahead of me. Well, if Johnny can make $10 more, why couldn't I make $10 more? Well, you could have held the trade longer, you could have sold the trade longer, you could have developed another different skill set. But from personal sentiment, regulation, for just like the Bitcoin, this isn't about Bitcoin, but for regulation of the GameStop trade, the only thing the market makers should do is just make sure the trade flow executes. But for capitulation, right, today when GameStop goes from 518 pre-market to 127, that free fall, right, short squeezes is when they can't cover, they can't buy the shares back. Capitulation is when people are literally selling it so fast, the bid is like non-existent. And so you'll see during genuine short squeezes like GameStop, again, shout out to Deep Fucking Value on Reddit. Great example. Like I said last couple episodes ago, I said you could run $50,000 to 150 million. Deep Fucking Value on Reddit has a verified trade of about 50K, I believe, to I don't know exactly, but probably about 45, 55 million. Like I said, this is clearly the most volatile thing I've seen this year. The year's pretty young, but in the past 8 to 12 months. But again, you need one or two of those trades, and now you have $50 million. And I do believe on the Deep Fucking Value trade, that's a Reddit username. I think he was down like 50%. So like the appreciation, like I think his initial investment was about 100K. So he didn't hit kind of close to the bottom on his trade, and you can still see you give 50K to 55 million is a profound a realization for an average retail trader. So it's also a great example of how one or two price, you don't need a lot of stocks, you don't need a lot of trades. Now the guy or girl who made that trade has $10 million in real estate, $20 million over here, $10 million in their still account, or whatever they can do with it. And so, great example of short squeeze, great example of sentiment versus fundamentals, great example of a personal retail or of an individual retail trader making a lot of money. And thanks for watching. Squeeze my GameStops and enjoy the market volatility. Thanks for watching.